Hello traders, welcome back to the channel. I hope you enjoy my previous content and I hope you take some useful information from the content that I share here. So we track the patterns inside the market, we track the advanced patterns or the basic pattern formations in order to identify or try to identify the next moves inside the financial markets. Let's start with Bitcoin today to be a bit different from the recent or the previous videos. Let's start with the cryptocurrency. Now threatening the major support level, we have 57, 844 and 131. We have support for Bitcoin and we have resistance at 61, 182 and 65, 103. So basically the major resistance level remains above. But I have also identified the potential head and shoulders pattern formation, and this is important to consider. A violation of this support level may trigger momentum to the downside for the cryptocurrency, in this case for Bitcoin, and if that happens, I will point to 53,296, and eventually if the price and once the price approaches these levels, we may also consider the formation of a bullish crab pattern that invites Bitcoin to visit the previous weekly fractal resistance level. So pay attention to this edge and shoulders pattern formation for Bitcoin. Let's start, of course, with the Dixie. Let's observe the Forex market. Last week we called your attention to a retest or this retest of the previous support level and potential bounce from these previous lows. As we can see, the Dixie has reacted accordingly and it's now approaching or close to the previous level of support, 102.16. So this is a previous level of support, a previous fractal support level, and we are I admit this level, let's say I admit this level offer resistance or may offer resistance for the Dixie, or even a bit higher at 102.80. That's a 38% Fibonacci level. I admit also the possibility to threat the recovery of the daily fractal support. Many traders will be excited to say, okay, probably the market will trade higher, and that's also one of the possibilities. But the 38% Fibonacci retracement right there, 102.80, may also put some pressure for more downside momentum for the Dixie, especially because we're still trading below this potential trendline support, and if that happens, we may see the price recovering this level of resistance again. So if that support turns into resistance, we may see the price rejecting that trend line, this previous support trend line, acting as element of resistance for the Dixie. So I admit more downside momentum, but not for now. For now, I still believe there's room for more downside for the pound, the euro, the Aussie, the Kiwi, and let's discuss all of those pairs. So for the pound, not back to the previous resistance. We were already threatening these highs before the last week. I believe. Let me confirm this. Yes, we were. Yeah, last Friday we retested these previous highs in fractal resistance level, and we still threatening this previous resistance level. In fact, we have already a new daily fractal support at 31.09, but I still admit a deeper retracement towards the 38% Fibonacci retracement level, 128.97. This is the previous monthly fractal resistance for the cable, and this is also the 38% Fibonacci level. So there's convergence between the default target for this deep crab pattern completed above. So some of you are familiar already with this crab pattern completed at the golden Fibonacci extension. This pattern always suggests a deeper retracement to the not a deeper, but a retracement to the 38% Fibonacci level. And in this case, as you can see, we have perfect convergence between the monthly fractal resistance and the Fibonacci level. Euro versus the Aussie, the euro versus the dollar, I'm sorry. Basically, I expect the same reaction. Retracement back to the 38% fib, 109.72. That's where I believe the market may. And this is also the previous weekly fractal resistance. As you can see, we have a minor fractal right there at 110.47, previous resistance level, putting some pressure for the euro versus the dollar, but ultimately I want to see a deeper retracement towards 109.72. The same I will expect for the Aussie. Last week already mentioned this projection, this retracement also after a retest of this weekly fractal resistance level. Let's see how the market reacts from here. We have also a major resistance, let's not forget, the 68.71 monthly fractal resistance above for the Aussie. Of course, the Kiwi will not be different. Expect a retracement back to the Fibonacci levels. 61.93, the very first Fibonacci level. We have also the monthly fractal right there now under pressure. Previous resistance may work as support, so don't be surprised to see, a period of consolidation inside this range between the most recent fractal resistance and the previous fractal resistance level, which is now acting as support for the Kiwi. I will admit more Dixie to the upside. The Kiwi should trade lower. Of course, this will be inverted with the dollar, with the Aussie versus the New Zealand. If the Kiwi starts to pull back, there's always a possibility for the Aussie versus the Kiwi to trade higher or move sideways. We have a range already between support levels and resistance levels, and that being said, let's also consider that possibility. Another pattern that I think we should pay attention to, it's his double bottom. So we have kind of a double bottom formation which points this to the neckline. This is the 108.80. That's the most recent fractal resistance. That's a neckline, and we are now threatening the violation of this neckline, which points to 109.29. Nothing more than that. Of course, this may work as a reversal price behavior, a reversal pattern, but default target for that pattern lies at 109.29 and not at the daily fractal resistance. Okay, this is your target levels to consider for that double bottom. Of course, if the price decides to maximize your profits, even better, but pay attention to this breakout of resistance for the Aussie versus the New Zealand. We have a nice range established between resistance at 85.10 and 83.99 for the dollar versus the Swiss franc. Again, if the dollar keeps trading higher, I admit more momentum to the upside, eventually towards a 38% Fibonacci. Again, as you can see, we have already traded that 38% Fibonacci level at 87.33. Then we have a new lower low, and I admit another move towards the same Fibonacci level, 38% Fibonacci, if the Dixie keeps scaling up. We have signs of bullish divergence that I pointed last week, which produced this nice bounce to the upside, a nice first swing for the dollar versus the Swiss franc. Norwegian krone, we had pointed this pattern before. Alt-Bat pattern completed at 10.44, nailed the 113% Fibonacci extension level, and then after a period of consolidation, after a period moving kind of a sideways on a lower time frame, finally the price breaking above the structure and printing already a new daily fractal at 10.64. Default target for that pattern lies at the 38% Fibonacci level, 10.70. That's the default target for the Norwegian krone. We have also the euro versus the pound. We projected this bullish pattern at 84.09. We have a new lower low already, 83.97. It's important to remain above this fractal resistance level. If the price trades below it, it will invalidate the pattern. So in order to secure the reliability of this pattern, you need to hold above this fractal support level. So we have a bullish pattern completed already for the euro versus the pound. Default targets 84.84. That's a 38% Fibonacci level. Very much the same, euro versus the New Zealand completed a bullish cipher pattern at 76.62. This is a 78.6% Fibonacci retracement level. And again, the same will happen for in terms of expectations. Based on this pattern, we always expect a move towards 38% Fibonacci retracement level. That points to 180.20. That's a 38% Fibonacci retracement of all this swing to the downside. Then we have also, and of course, without ignoring the previous edge and shoulders pattern that we mentioned before last week for the pair. The pound versus the Aussie, nice structure to track. We have nice support at 192.70 and resistance at 95.37. I projected this move to the downside based on this expanding triangle. You can see that on the link above. Actually, you can see all the previous projections on the link above in your screen. And if the price breaks below this support level, as I am expecting, below these 92.70, I will expect not only a move towards the golden Fibonacci level, but I will also expect the formation of this bullish crab pattern, which may produce another bounce. That bounce should retest these previous lows again. If you track, probably the 38% Fibonacci level should be synced. Actually, not only synced, but it nailed the previous lows, the previous support level. So basically, if the bullish crab pattern completes at 191.05, expect a retest of the previous support level back to the 38% Fibonacci level, 92.70. Okay. Pound versus the New Zealand, very much the same pattern projected below 207.82. I'm still waiting for the formation of this bullish crab pattern. To reinforce this trend line support, I need to see that pattern completed at the golden Fibonacci extension level. Nice reaction to the upside for today's session. We are already breaking above the intraday resistance level. Pay attention to this support, 2.1151. That's the daily fractal support level. I admit that level may act as, potential element of.
Hi, my name is Blake Morrow, president and co-founder of Forex Analytix. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
Resistance. Let's change to the commodities. We pointed the potential double top for gold last week. This is your neckline. Actually, we have already a few levels updated, so we have already the fractal support at 24.93, 25.31. That's a resistance for gold. Gold, wait for the breakout below the support level or violation of the support level. That may trigger moved to the downside. Based on the Fibonacci ratios that we have at our disposal at this time, it's already possible, I think, to track another pattern, and that's eventually another crab pattern, golden Fibonacci extension level. These points basically just a few points above the default target for the double top. So we have default target for the double top at 24.31. That's the 200% Fibonacci extension level. We have a bullish crab pattern projected at 24.34. Let me also check these. Actually, let me check these retracement from these lows. No, actually I want to measure this full move to the upside between major fractals. Fractal support 2286, fractal resistance 2529, 2531. As we can see, we have the 38% Fibonacci retracement right here. So that creates kind of a nice cluster to pay attention on gold, if somehow gold retraces to these or pulls back to these levels again. So, but for now, we're still holding above the channel, or we're still threatening the highs of the channel. We still, as I said last week, this may work as kind of a triangle, and we need to adjust these. Eventually, if the price starts to bounce again, we need to adjust this support level of the triangle. But I was seeing these last week as similar to this, so I was expecting a move to the downside if the price breaks these support levels. So basically, I think it's useful to track the potential double top, so we have kind of a nice V shape here. If the price breaks below the support level 2470, I admit that move to the downside, and if the price breaks below, we will talk about that later, the possible the crab pattern that we projected, but that price zone, it also makes sense to find support right there to try to get the train inside the train for more upside momentum. It's not impossible, and it's very viable, and it's something that I will pay attention to. Very much the same may happen for silver, which has already reacted to this head and shoulders pattern. We have targets for that pattern at 2783. There's convergence with the 61.8% Fibonacci level. I admit if the price achieves these levels, may trigger a move to the upside. Let's also find that crab pattern or that convergence between extension levels. In fact, we have the golden Fibonacci right there, so we have also another or a potential crab pattern also for silver at 2788. That's the convergence box between the golden Fibonacci level retracement, golden Fibonacci extension, and the default target for the head and shoulders pattern formation. So if that pattern completes, expect a move or a bounce to the upside. Dollar versus the Canadian, we have already discussed it, or not yet. Let's discuss let's push that one. Let's also check the dollar versus the Canadian. Nice bearish flag pattern right there. We have the golden Fibonacci still under pressure at 134.68. And we have this bullish shark pattern projected below the support level. So we still need a new lower low on the dollar versus the Canadian in order to complete this pattern. I'm not sure if the pattern will complete. I'm not saying that. I'm saying if the price completes this pattern, I will expect a move towards the highs, okay? So towards higher prices. But if the price fails to complete this pattern, of course, that means the price will keep trading higher. Okay, basically, if the price approaches this weekly fractal support again, 35.82, I will expect more pressure to the downside. So we are talking about a retest of these previous lows again, back from July. If the price approaches these levels again, I will expect pressure to the downside. That may also converge with the very first levels of Fibonacci, at least at 23 or a 38% Fibonacci, a few points above, 36, 30, also a possibility. So pay attention not only to the fractal support level, but also a few points above the 38% Fibonacci retracement level, which may act as level of resistance. Crude oil approaching support levels again. If the price breaks below the support to $72.24, if the price breaks below, I will expect a move similar to 6.8% below the previous low. So that points to the golden Fibonacci extension and also the previous fractal support from December. So this is the monthly fractal support. If the crude oil breaks below these lows, that will favor a continuation of a move to the downside. And if that happens, pay attention to the bullish crab pattern, a bullish deep crab pattern projected at the golden Fibonacci extension below major support levels. Of course, if that happens, the dollar versus the Canadian should trade higher in order, or inverted with the crude oil. So for that being said, it may trade higher if crude falls below the support. Almost finishing for today. Back to the SPX 500, eventual double top not confirmed. We still need the violation of the support level, not yet validated. We have already the bearish alt bat pattern at 56.33. Nice first reaction to the downside. Even if the price breaks above these highs, pay attention to the eventual pullback. After that happens, we have a major resistance at 56.80. Pay also attention to a retest of these highs, but if that happens, I will expect a deeper retracement for the SPX 500. Expanding triangle, I expect a new higher high. I can expect a new higher high if the price, if the price fails to unfold into a double top. I will expect a new higher high. And after printing a new higher high, I will expect a reaction, a new push to the downside, without breaking the highs. I'm talking about a possible expanding triangle below the monthly fractal resistance. Of course, if the price starts to pull back again without breaking this resistance, that calls again our attention to the neckline, and probably we will talk about that double top again. The German DAX, so we have a few levels to consider. If the DAX keeps pushing lower from these highs, I will not be surprised to see that happening after printing a new historical high. So I admit the eventual retracement for the German DAX. The Bund, as we pointed before, and we called your attention to the eventual violation of this structure to the downside. So we called your attention to the violation of this flag pattern towards the 38% Fibonacci level, 133.37. That's where we are now, and we have also the previous resistance level at 132.82. Basically, I will also admit the possible push to these previous lows, also for the Bund. Let's see if the market will correspond to that move. We have also, I think we have some convergence between the golden Fibonacci extension right there, or just a few points. Actually, we are approaching the golden Fibonacci extension of the last swing high from this consolidation. So we are approaching a potential pressure level for the Bund, of course. So that's my 2 cents for today, and I hope you take some useful information from these, from my insights, and I hope to see you in my next video. Have a nice trading week.